All right, welcome back to TTM Trade. So look, today we're gonna be talking about, you already know, the S&P 500 ticker, SPY, the ETF. And we're just gonna kind of look at the VIX, look at some bonds, look at what news is supposed to be coming out this week that could possibly move the markets, and then just kind of look at earnings. So, before we jump into the technicals, we do got a couple earnings coming out this week. As far as H&R Block, AutoZone, a couple, none of them major that I would, is going to shift the market in any general direction, but just beware of these plays that's coming out this week. And then just for economic data, some of the most important ones that we need to be looking at is just the core inflation that comes out Friday. That's going to move the markets. And then the initial jobless claims, because a lot of people are on edge as far as Jerome Powell cutting the taper on bonds and then interest rates possibly being raised. And then the crude oil inventories, and then the job opening. So some of the things to pay attention to. A lot of that news really doesn't come out until the start of Wednesday. So Monday and Tuesday should just be some normal ebbs and flows in the market without any really strong fundamentals attacking the market and affecting it. Okay. But again, just looking at ticker SPY, we already talked about this one. I do think it's due for a strong bounce. I am still overall bullish on this in the short term. I've seen a lot of traders and watched a lot of other videos saying that, it is still intact as far as the uptrend. And yes, it is. If you look here at the weekly, the uptrend is still intact here on your right hand side. We've been holding that top one standard deviation Bollinger Band on each and every pullback. And then we'll get a dip down here to the middle weeklies, middle BB, and then with another bounce. And now, as you can see, we're dipping back down. So again, I am expecting a 440 dip down into that area, and this is why I possibly, not possibly, but this is why I'm trying to lock in some puts for this 440 drop down into this area, and then we'll kind of reevaluate what we want to do from there. But I do expect a slight bounce from that 440 area, and then we'll kind of see from there. Now, there is one difference that is kind of different from this dip among all the other news. Um, this overall week to week trend, in my opinion, is beginning to slow down. If you look here, the PMO has been following this trend all the way through uh, since what was that, June, early June. It's been following this upward trend all the way through, all the way from the low 300s, all the way up and over up into the upper 400s, as far as all the way up to 469. Been riding this PMO, this price momentum oscillator, all the way through. Now, if you look, if I double click the PMO, you can see it has started to cross over and it's falling through its short term average. Now, this is on a week to week basis, so there's a lot more data that goes into this, which we should definitely take this um, a little serious, not too serious, but you can see that that overall upward momentum is beginning to slow on a week to week basis. So, more or less for the bulls who are in this for the long term, just keep that in mind. I know a lot of bulls are still betting on that 500 push, and it is possible, just pending the news, but uh, there it will more than likely be a pretty volatile move if it were to try to get up to 500. That move would be very volatile. Now, going into Monday, how do I plan on playing this? All right. If we go over to the futures, which should open up 6 p.m. Eastern, my time, the way I plan on playing the futures is, like I said, I do expect a bounce on the futures, probably up. I do expect to bounce probably up to about 460 again for another attempt. And then from there, we should flush out. Now, the way that I've been playing this, we're going to dive a little deeper into the intraday charts. On the left, I got the 5 minute chart, middle 2 hour chart, and to the right, daily. Now, again, I normally keep a macro picture to the far right, weekly or monthly. In the middle is always my daily chart, so I can have a rough idea of what's going on day to day. And then normally when I'm trying to pinpoint my entry, I normally use the intraday chart, such as the 2 hour chart if I'm really trying to ride that intraday momentum. Or if I'm really trying to pinpoint my entry, I use the 5 minute chart. So the way I plan on playing this, I do plan on riding this 5 minute chart back to the upside and then locking in a big position back down to the downside. Let me show you what I mean. All right. If we look here, matter of fact, let me because this video is in the way. I'm gonna pull the 5 minute chart up to the right, keep the daily in the middle, and put the weekly to the left. Since I got this video player. So 5 minute chart to the right. If you look here, all right, we've been able to. Now I'm not gonna say I've rode every single one of these waves. Now I probably rode about 4 or 5 of them, but we're able to pinpoint when the momentum is shifting. All right. Overall, on a short-term intraday basis, we are in a downtrend in a micro picture. In a macro picture, we are still in a uptrend. Yes. All right. For any bulls out there. But on a short-term basis, we are in a downtrend. And the way that I've been playing this, if you look right here at the PMO, all right, I normally look for resistance right around 150 SMA, and I look for the momentum to fail each and every time, right? So if you look here, each time we get up into the 150 SMA on a 5 minute intraday basis, there's some failure right above it. Failure, 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 failure. And I normally wait till the PMO starts to lose momentum to the upside and gives me that early signal before I will close out those short-term calls and take more long-term puts to the downside. So if you look here, I'm not even going to count this one because I didn't play this one. This one's just a pure gap down the following morning. But here, PMO slow down. Here, PMO slow down. Here, PMO begins to slow down. Let me show you what I mean. Now, when I zoom in, looking at this on a 5 minute basis, 5 minute chart to the far right, each and every last one of these drops here, 2 hour chart in the middle, that run up and then a drop, which catches everybody off guard. The run up, drop, catches everyone off guard. Run up, drop, catches everyone off guard. If we look at this, put that daily up over here. If you look at this on a more intraday basis, 5 minute chart, you can time these drops before they happen, or you can know when to close out your position. So looking here back in this area at the top right here, 2 hour, you can see the PMO as it's building that momentum to the upside, 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 it starts to lose momentum and it starts to cross over. Now, knowing that we're in a downtrend on an intraday basis, I put more weight on a PMO crossover to the downside than I do to a PMO crossover to the upside. Okay. If during this 2 hour chart spree right here on this run from early October up to early November, this run, every 5 minute PMO crossover to the upside, I took more serious because on a more macro level, right? Even though it's a 2 hour chart intraday, but on a bigger picture level, going from 5 minutes to 2 hours, where there's a little more data in each candlestick, I took each PMO crossover to the upside way more serious than I did to the downside because we were in an overall uptrend here on an intraday basis. Now, going back with the news and everything that's going on right now, I know that we are in a short-term intraday basis downtrend. So every single one of these PMO crossovers, I close out my calls and you will see it every single time. There's a consolidation period. You can see it here with the Bollinger Band squeezing. You can see where the Bollinger Band width is lower than its moving average, which means there's a breakout to follow soon, and then you can see the PMO beginning to cross over. Once I see the PMO begin to lose momentum to the downside with the price action consolidating here and the Bollinger Band width signaling the price actions crossing over, I'm almost just based on probabilities of my technical indicators and me trading like this for a very long time. There's a very strong probability that this consolidation breakout will be more or less a breakdown with the PMO giving me fair warning. All right. We shift here again. We have another strong run up to the upside. Circle this one. When else I didn't pop up and did I sync all my drone synced up. So then we got this run up here. PMO again. Same pattern. Same pattern over and over. You get another after the strong breakout to the upside. I know that we are in a day-to-day downtrend. Again, I don't know why this circle didn't pop up right here. Oh, now it's popping up. Very huge. That's weird. Let me delete this one. On this run up here, strong breakout to the upside. Again, that upside momentum begins to slow. We go into a consolidation pattern with the Bollinger Band squeezing. The PMO starts to show downward momentum, and we can also see that consolidation here again. Normally, when I see a consolidation period, premiums are very low, and you can lock in puts at a very cheap price because the price action has been moving upwards, and now the intraday basis is a little less volatile. So then we take puts here to the downside. Again, here, another momentous breakout to the upside. I'm showing you each one of these little waves from last week. Breakout to the upside. Price action begins to consolidate here. Consolidation here. The PMO, as far as how wide it is, begins to flatten out. Boom, you get the crossover, and then you get the breakout or breakdown to the downside at a high volatile rate. Now, what do you think we're doing here? All right, I just showed you the same pattern 3 times. All right, we're going to have another strong breakout to the upside here. And this is the bulls' opportunities to try to hold their ground. All right. But what I expect is another strong breakout here to the upside, 2 hour chart in the middle, another strong breakout here to the upside to possibly reattempt this middle Bollinger Band. And then if the bears are really in play, we'll take another strong run to the downside, which is where I'm aiming for 440. All right. Now, where the bulls will make me a believer is if they break this last lower high and they take this all the way up to 465, 464, where this top one standard deviation Bollinger Band is on a 2 hour chart. And then when the price action pulls back, it pulls back down to this 453 to 454 level and holds. Then that will let me know, that will signal to me that the bulls were able to break out of this downward rut, right? And then when they pull back, they found that last area as support, and now they're holding it above this bottom one standard deviation Bollinger Band on the 2 hour chart. So in order for me to go into a bullish mindset on a short trend, on a intraday micro downtrend basis, this will have to happen this week. The bulls will have to run this up to 465, pull it back to 454 and hold, maybe 453 and hold, and then get another bounce to create a higher high, possibly up to 468. Again, if the bulls can do that, then that will shift my mindset back to a more long-term uh, play of this bullish upward trend, and then we would take calls uh, for the rally higher. Okay. But if we go into next week and the bulls can only run it up to 460, and then they get a strong rejection and they flush out to the downside, creating a lower low, then again, I'm playing my puts at 440 to the downside. So this is how I plan on playing the SPY going into next week. Move all the drawings. All right, we're gonna put the 5 minute chart back to the left, 2 hour in the middle, daily to the right. Matter of fact, let's go more macro. Weekly right, daily middle, 2 hour left. All right. Now again, if we go and we look at the VIX, VIX is still trending up, was very strong. All right. It is in a very strong uptrend. Volatility is consistently picking up, and it is above both its short and long term average. And you can see that this upward momentum is beginning to consolidate, as you can see here on the bottom, and it could possibly break out for another high to the upside. All right. So I would watch for the VIX to pull back to that 27 area to give the spot some room to breathe. And then if it breaks that 27 on high volume, then again, the mindset shifts. If it hits that 27 area and begins to bounce off of it on the VIX, then I know that we're about to have another volatile spike in the market and the SPY is going to fall further. Now, a couple plays that are breaking out, which I don't think a lot of people are paying attention to. I've gone long in bonds. Now, again, this is the weekly chart to the right, so way more data in each candlestick. But you can see the weekly It's been as far as the TLT, the 20-year bonds have been on a strong downtrend from May of 2020, excuse me. And it's been just constantly bleeding out, bleeding out. It finally hit its 150 SMA, and you can see investors started coming in, buying up the bonds and locking them in. And then you finally get this breakout to the upside with a pullback. And now you can see the price action is trying to break out of these bands. All right. And it looks very bullish because, again, if you look down here to the bottom right, this downward breakdown of high volatility right here, where you get this volatile spike, you can see that that downward pressure has subsided, and now the price action is consolidating as the bands begin to constrict, and you can see the Bollinger Bandwidth falling back below its averages. All right, so wherever there's a consolidation period, there's normally a breakout or breakdown period. And just looking from the price action with the Bollinger Bands, you can see it had a breakout, came back to for a pullback, but held its bottom one standard deviation and its middle BB as support, and it's starting to break back out to the upside. So just looking at this, the probability of the bond market going crazy and breaking out to the upside is very high. So I have locked in some long-term bonds. Um, Same with the dollar. I was going to play the dollar a while ago, back when it was sitting right around, was it here? No, it was right here. On this pullback, I was gonna lock in UUP. Um, yeah, right around 24. Gonna lock it in. Forgot all about it. Now the dollar's already running. All right. So the dollar's getting very strong if interest with inflation going up. You can see the dollar is moving very, very strong. Something else to pay attention to. I had some people ask me about Bible. Bible, real quick. Bible looked like it's gonna drop all the way down to 100. Bible's last line of support to hold was right here in that $100, right in that 130 range. Where this last strong line of support was at. After that poor performance on earnings, you can see Bible just kind of gapped and drove straight through it. So if the market does rally, then I expect Baba to try to rally back up to 130 and then hit that line of resistance. And then the next line of support is all the way back down here when Baba first um, IPO'd and came out, which is back in that $100 to $80 range. All right. So if you are playing puts, I think those Baba premiums are pretty high right now, but I do think there is about another give or take 10 to 20 point move to the downside for Baba. And then last but not least, I know this is gonna make a lot of people mad. Tesla. I've been watching Tesla. Tesla's been holding up with the sell-off, but I do think there's an opportunity to take Tesla uh, down to about 780. I highly doubt Tesla goes any lower than 780, but I think there's an opportunity to take Tesla down to 780. Um, you can see Tesla has been in a very strong uptrend day to day. All right, this uptrend first broke out back in early July 21, and that was back when it was right around 639, and it's just been on the tear as the PMOs followed that momentum and then had this strong breakout to the upside. Now, again, reason why I'm thinking about taking Tesla to the downside back to that 780 to lower eights is, again, any stock that is in a strong uptrend will hold its middle Bollinger Band and its top one standard deviation as line of supports, especially at bottom one standard. If it fails that bottom one standard deviation, then normally that means that trend or that price action as far as the momentum has shifted a little bit. So if you look at Tesla back from June of earlier this year, June, you can see on each push higher when it pulls back, it holds that bottom one standard deviation and that middle BB, each pullback. And then even on the strong run up, as it created this higher high right around 1243, when it finally sold off and pulled back, it tried to rally again and it had troubles getting back above that one standard deviation. So it pulled back again. Bulls tried to rally the price action again back above that one standard deviation, failed again. So just like the price action back here in a bull run holds that bottom one standard deviation, when that momentum begins to shift, that top standard deviation now starts to become a line of resistance. And as you can see here, as it blasted through it, each time it tried to recover, Tried to get up to the one standard, failed. Got up to the one standard, failed. Tried to get up to the one standard again, failed. And then on those three failures, what did it do? It pushed through that